our Diwali special, Summer 2071. I have three bullish guests with me, and with good reason. My guests, Manish Chokhani, Ramesh Damani, and Samir Arora. We have spoken a lot about the top-down themes, about the PSU themes, and about general sector allocation. Let me come to the one theme that fired us all, the Alibaba offering, and which made us suddenly realize about internet and related themes. Not too many listed stocks in India. Manish, how would you play that theme?
Well, there are really two, Just Dial and Info Edge, really, which are the direct listed ones. There are a lot of ways to play it through, courier companies and logistics companies and so on.
Are you doing that, or would you advise?
Because I also work in private equity, I have the privilege of seeing all these companies when they're young, and one can make investments over there directly. I also see what we do in the US and China. Now, China is the most virgin internet market in the world, which Indians can't play. But there are ways for Indians also to buy some of these global internet stocks. There are funds now which offer you the opportunity to participate in some of these companies overseas as well. And I'd suggest people really serious should take a look at some of these funds. There's one of my friend, I don't normally recommend, but Parag Parikh runs a nice small scheme, 500 odd crores. They do some money overseas and some in India, and interesting array of stocks, high quality here as well as overseas. But having said that, it's an idea whose time has come in India because of our infrastructural bottlenecks over here, and more of these companies will come to market. I suspect a lot of them will just straight away go and list overseas rather than doing it in India. And what are the rub-off benefits of these companies? Maybe on the supply chain people here as well as the logistics players over here. So from a listed market perspective, those are the sort of places to look.
Generally, a blank check question actually, what would you be buying on? I mean, I'm sure consumer goods, consumer companies form a big part of your portfolio as well, like
ITC, Pharma,
Finance.
Sorry, yes, ITC, Pharma, Tech, these are all stocks that are dominant in my portfolio. But typically in Diwali, people look for new ideas, quote unquote, as if there's something better about that. But let's give it a crack and see if that becomes better. There are two. The e-commerce space will do well, and as Manish said, you don't play the front line because they're very expensive, but the ancillary, data, packaging, media, logistics, all offer value. They've all had a great run in the last year. You look at also the analog or the real world, where you see all these construction companies doing well. So I suggest one idea for your viewers. A company called Ingersoll Rand.
Oh, yes.
They benefit from two themes that will play out, I think, over the next few years. One is the Make in India theme. They start a contract manufacturing business, which I think they can scale up very rapidly. It's about a 40-50 crore base right now. Secondly, they're linked to the construction, textile, pharma industry. This company has really done nothing for the last 15-20 years, but I recently visited them. I think they have a new energy. Their capex is done. It's around $700, 2,000 crore market cap, almost 500 crores in cash. This company can give a compounded return, not necessarily over 1 or 2 quarters, and probably not over 1 or 2 quarters, but over the next 2-3 years. This is the kind of high quality businesses that you want to be in. Good corporate governance, good verticals that they're addressing. So, it seems to me to be a good place to, start looking at.
Ingersoll Rand, your Diwali gift to our viewers.
Gift, I hope it works out. But,
Samir, your thoughts. What would be your favorites in terms of stock picking here on?
No, I'm going to answer your previous question.
Yes.
That how to play the internet for Indian retail investors. Don't play it. It's okay. It doesn't have to be, because there are only 2 listed companies. And by the way, we are short one of them. But separately, it's absolutely true that you can easily buy US companies. I own nearly all of them. I own Google, Apple not internet, but the new whatever, Netflix, everything. And those Indians can also buy. But in India, it is for private equity. And secondly, because of the advent of private equity, the public market guys will not make any money even when they go public. So let's look at this one, Alibaba.com, which, because I owned Yahoo in the olden days, so I made some money. But broadly speaking, it went public at $67 or $68, and you would not have got it unless you were a private banking client of Goldman Sachs or somebody. And secondly, if it was in India, it would have been oversubscribed 200 times, so you would have still lost money. From the day it got listed, I think it is down. Day of listing means after the listing and when it started trading. So some of these things, because of aggressive private equity in India or in the world these days, that many of the money is made in private, via private equity funds, and by the time it goes public, Anyway, we have time. When they go public, we can evaluate. But today, to desperately try and get into private equity type domain by buying somebody who owns a little bit of this and that is not a theme. Stay away. In fact, stay away from companies which may negatively be affected by this.
You have 30 to 40% of your exposure in mid caps. So give us some ideas. What are or how are you picking those stocks?
Well, broadly, we don't pick stocks anymore. We just have them. But we own United Spirits. And my logic, which we bought, is that it is one of the few companies which is down for this year. Doesn't matter technically because last year there was an open offer or whatever. But very rare to find a stock down 10%. Secondly, we considered it the Modi equivalent. That means if Mr. Modi, when he became PM, whatever happened, we would say it is because of previous government. So the same thing happens with United Spirits. Whatever is bad, we say it's because of previous this thing. So even when they had a 4,000 crore write-off or whatever, they say, yeah, but that's previous management. And on the first day that they have a change, that the margin goes up 10 basis point or revenue goes up 1%, we'll say a turnaround has happened. But for the next one year or so, I thought, and it seems to be working out, that you cannot have a downside, it may not have an upside because nothing changes. But for 1 year, you will keep giving them benefit of doubt because they will also say that we are just cleaning up, we are bringing it to global standards, our reporting is now global. So every time they'll have a story for at least, say, 3-4 quarters or 2 quarters, and by that time, hopefully something will change. Plus, we know that Indians have a fascination for multinational companies. And in any case, even companies that go 10 and 15%, they give them 30 and 40 multiples, which we don't do for our own tech sector. Okay. Look at our own tech sector.
You own that? You want people to own that?
TCS down 10%. Of course, I own all the tech. But for somebody to sell a stock down 10 or 14%, that means he thinks it must fall 30%. Because if he was willing from a day before price to sell it down, effectively 15% down in 2 days, what analysis that fund manager must have done. So we like United Spirits, we own it, and it's okay.
Two brief themes to discuss, and probably time permitting, only one with each of you. This DMIC, you were speaking about the smart cities. How do you play that theme? Because now it's a NDA government or a BJP government, wherever the DMIC is rolling out. Can the theme be played other than, these mortgage companies and the fact that there will be young people with, money to consume? Okay, Mr. Damani.
You can. I mean, you play through the infrastructure companies. I think there's a big, we're on the verge of a huge construction boom in this country. They only
cement.
Even construction, just basic construction, cement too, but also construction companies. There are only so few with good capacities, good balance sheets. And I think they're booked, like what happened last year at NBCC. You look at the book-to-bill ratio, what happened there. I think they're very modest now at 2 times, 3 times, but they'll go to 8, 10 times. And at that time, they'll have pricing power in that business. So you look at that, overall sector, look at cement companies, you look at, sanitary ware. There are lots of ways you can skin this cat. But that is a theme that I think investors will be focused on for the rest of the year.
Okay, and then a theme, perhaps divestment. You think anything at all will be picked over there? They are supposed to do about 50,000 crores this year itself. But should investors look for gems in that space? I'm not asking Samir that question.
Well, I have a different take on this, and I wish the government would not sell in dribs and drabs and sell things away at a fraction of book value. The world has 1%, 2% interest rates. They need these annuity type businesses, which a lot of the PSUs are. The time is to sell them all these lock, stock and barrel, take that money and build new assets, and that would be Make in India. That would be building out of new infrastructure. I don't see any logic. Why does the government have to sit on Steel Authority of India and ITC and, God knows, so many hundreds of companies. The Indian Railways can attract a lot of money. Life Insurance Corporation can attract a lot of money. A lot of government land can be sold. So the government balance sheet is $800 billion of debt.
We haven't moved that far to the right. That's not what happened.
No, but we pay $75 billion of interest every year. The entire public sector produces a grand return of 2 to 3%. We cannot be holding on to these assets, and after holding them, we are selling them at fraction of book value. So I'm hopeful towards the end of Mr. Modi's term, which may be 5 years, 10 years, who knows when, a lot of this state which has been built up in the Nehruvian era will be dismantled.
Mr. Damani, you wanted to add to anything on the divestment theme at all? Should investors look there? Because that is that is probably going to be the story for the next 5 months. I know that is not the time we are concentrating on, but will you pick businesses?
No, I agree with Manish and says drib and drabs. And are we going to move so right to center that we're going to dismantle the PSU sector? I don't see that happening right now. There's no political consensus in this country that will happen. But just for fun, because they're all added US stocks, I'm going to give you 2 stocks in the US that I'm following. One is Coke. I think it's breaking out of a 20-year zone. And UPS, which is the logistics champ in America, and they're showing some pricing power, which is what I find interesting about these logistics businesses, because e-commerce is now 11%, will go to 15%, so they're seeing some pricing power. So just for fun, we'll check back next year how these stocks are doing.
Oh, absolutely. Samir, Mr. Damani, Manish, thank you very much for joining so enthusiastically in our Diwali special. There is a bunch of ideas for everyone. First of all, get your money into equities. That is the first call that is being given by our experts. And then, of course, if you're an HNI, there are the Cokes and the UPSs for you to invest. For the broad brush, consumer finance companies, construction companies, mortgage finance companies, a whole host of ideas have come up on our Diwali special. I thank all of you for joining into this discussion and giving us so many Diwali gifts. Here's wishing all of you as well a very happy Diwali and a very successful Samvat 2071.